What is up, everybody? This is Stock Market Education, and today we're going to take a look at Palantir Technologies and see whether or not it's a buy. Let's get into it. Palantir is a data analytics company that engages in data integration and software solutions and is currently being used by pharmaceuticals, aerospace, healthcare, and the US Army. Palantir has been written off as a spec stock for Wall Street bets. However, the US government sees a different story, signing them multi-year, multi-million-dollar contracts practically overnight, which is why we're going to take a look at this stock today. Why is the US choosing Palantir over well-established data analytics systems like Microsoft Azure and AWS? Is Palantir going to grow? Are they safe to invest in? Before we get into the video, make sure to like the video and subscribe to the channel if you haven't already. I appreciate every single one of those likes I get from you guys, and it really helps out the channel, so if you could do that for me, that would be awesome. With that being said, let's go ahead and take a look at some numbers. Palantir's revenue grew from $191 million all the way up to $289 million for a percentage increase of 52%. And they're expected to continue to grow by about 31% by the end of 2021. Not only that, their average revenue per customer is extremely large because Palantir's customers are mostly governments and large corporations, and they're continuing to increase the amount of large corporations and governments that use their products. They increased from $4.2 million up to $5.8 million for a percentage increase of 38%. And their average revenue for their top 20 customers went from $17.4 million all the way up to $23.6 million for a percentage increase of 36%. And Palantir is a company that went from losing money on the bottom line to a company that's making money on the bottom line, going from losing $92 million to making $73 million. Now, the revenue from government contracts was where they hit the jackpot last year, going from $97 million all the way up to $163 million for a percentage increase of 68%. With $91 million contracts coming from the US government and a $36 million contract coming from the IDIQ award with the National Center for Advancing Transitional Sciences. When we take a look at their gross margins, we can see that gross margins went from 70%, which is already amazing, 70%, up to 81%, showing us that Palantir is continuing to flatten their cost of goods sold and increase into their total addressable market. Now, let's take a look at their balance sheet. For cash, they went from about $1 billion in 2019 to about $1.8 billion in 2020 for a percentage increase of 66%. And $1.8 billion is a giant sum of money when you compare it to their debt of $197 million. And their debt significantly went down from $396 million down to $197 million on their balance sheet. And their total assets went from $1.59 billion all the way up to $2.6 billion for a percentage increase of 63%. And their total liabilities decreased from $1.44 billion all the way down to $1.35 billion. If I had to give a rating for Palantir's balance sheet, I would give it about a 9.5 out of 10 because of how liquid it is, how much working capital they have, and how much more cash that they have than debt. So to recap so far, we have a data analytics company that increased revenue by 52%, went from losing money to making money, and has a pretty clean balance sheet. And so far, Palantir is very compelling. When you have a giant, well-established data entity like AWS or Microsoft Azure, but the government signs a multi-year long contract with Palantir instead, that's a big deal. These 5 sentences tell us Palantir's data centers can integrate their data, and it's a technology advance that is far beyond their competitors, and that's why AWS and Azure are being passed up by large entities like Palantir. And this sounds really good, but one problem with Palantir is that they have a very high customer concentration. 61% of all their revenue comes from their top 20 highest paying customers. So if just one of their contracts doesn't get renewed, it'll eat at their cash flows and revenue and will ultimately deteriorate their balance sheet. And this makes Palantir a more risky investment. However, they're constantly diversifying their customer pool, and if they can continue to supply corporations with their product, they still have a lot of runway for growth. And Palantir has a market cap of $48.6 billion, which isn't a tiny company to begin with. However, weighing the pros and cons, Palantir is definitely not a spec stock. They are a company that should be taken seriously, and they're a company that's at the very top of my watch list. I'll be looking for a dip sometime in 2021, and if there's a significant dip for Palantir, I'll be loading up on shares. Thank you guys for watching the video. Make sure to click the like button and subscribe, and have a great day. Bye.